about today's SPY action, um, what I did right, what I did wrong. I'm not gonna like pull up my exact entries because it would take me a while to go find all those on my Robinhood and then try to plot them in here. But I'm gonna talk about again kind of what happened. So coming into today, I think we had like two or three really bullish, breakout days for the SPY. It went from looking like we were super bearish, going to make lower lows. Um, Lots of people selling and getting liquidated, I believe, last like Wednesday or Thursday. And then the market just completely turning around and flying. So, what we have over here, coming into today, we knew that with everything flying so high that there had to be a pullback on the SPY sooner or later, right? It's not going to keep going forever. We just weren't sure if today was going to be another day where it's pumping or a day where we finally get kind of that turnaround. So right here I have my 1 minute chart, which is my main day trading chart. Over here on the right I have my 5 minute chart, which helps me see more of the longer trend of the day. And then over here I have a 15 minute chart, which I will use to see more of the last couple days and then also get notified today in comparison to that, okay? And over here, I have my 10-second chart. This is what I use to get in and out of trades as quickly as possible. Because if you're over here on a 1 minute chart, this wick up, that might happen at the first, 10 seconds of the minute. As you can see, it opened here, it closed here, right? So that might have been the first 10 seconds, which if I'm over here on a 10-second chart, I'm going to see it hit up here and it's going to give me an opportunity to, to sell out or do whatever I need to do. And same with down here, right? This wick down here, you can see price opened here, closed here, but that might have happened fairly quickly within that first minute. So what I did wrong today was, honestly, it was just trading within all of this chop. So price would shoot up, I'd get bullish and maybe buy calls up here, and then it would get wicked back down. I'd sell for a loss. Then, like over here, it'd break below and I'd buy puts, and then it'd wick back up and I'd sell for a loss. And I kind of just let the market chop me up. And one thing I've learned recently is within the orb, it's kind of considered the no trading zone. It's one of a couple no trading zones. Now, often on a day when a stock takes off and goes parabolic up or down, you want to get in as soon as possible. You want to get in the no trading zone, but you want the stock to not stay within it. You need to get in within the first couple minutes. And if price pushes up, you got in, great. And if price pushes down and you bought, puts, then you're in really early and you're making money right away. The problem is when you buy either direction here, and then you kind of let this just chop you up the whole day, and So the one thing I was thinking about that I could do in a no trading zone, if I wanted to, I haven't tried this yet, would be to buy in the middle, right? So if I know this is a no trading zone, maybe I buy calls right here. And maybe I buy puts as well, right? Because then if price shoots up, I can sell my calls. If price shoots down, I can sell my puts. And I can just kind of rinse and repeat. Buy puts and calls, and then just sell with whatever the direction does. Just wait for it to kind of make that move. And here I started going heavy on puts when this broke, but I didn't wait long enough because as you can see, we had a retest of the orb, but it broke above, right? It didn't completely reject. And then we had this kind of a doji candle, sort of, where it's, it's pushing back up, it's turning green. So I got messed up here. And where I ended up actually doing good, which is what I should have done in the beginning, was wait for this to break below. Not here, because you can see it, right? It broke below, came up, didn't retest. It actually came back above, came back. So where I did good was when this broke below, this next candle, as you can see, did not retest it. It basically sat below and pushed further down. So when this happened, I felt more confident that even though I had messed up all this part of the day, that over here, my thesis of SPY turning red today for some period of time was actually going to happen. Now, what I did and how I played this was the second this started breaking below is I really kind of switched over to my 10-second chart because I wanted to try to maximize getting in and out of these of my positions as quickly as possible. Unfortunately, I still didn't play it perfectly, but I didn't do bad either. So let me come over here so I can kind of pull this up and you can see what I did and how I tried to trade it and how I recommend trading it if you're going to do it. So the first thing I start doing when this starts happening, right? The price breaks below. We get this bounce here. I set a trend line right there. Okay, I set a trend line, and at the time I don't know exactly what the angle is of the trend line, but same with here. So I set a trend line, bang, bang, okay, and then whenever we kind of make new lows or new highs, I copy my trend line and I set it again. So this one, as you can see, as it was going down, I was able to get 1 touch point, 2 touch points, 3 touch points. So this became my trend line, right? So basically, once you start having these trend lines, the goal is to, when you've got puts, when you come down to a trend line, you want to sell out of them. When you start pushing back up to where another trend line is, you would buy new puts if you're still, bearish on it. So down here, you'd sell, and you could, in and out of positions is already hard enough, let alone adding new positions that are a different kind. So I basically traded this all the way down, and I was alerting the Discord of, hey guys, these are my new levels, and I was simply giving those levels based on the trend channels. So, if we were, we'll say down here, then I'd say, potential buy zone is 775. And as price is moving down, I could say, okay, my take profit is in this range, right? The 773.60 range. So basically, again, I was selling my puts, buying new puts, selling my puts. And where I got messed up at one point was price came down here and I didn't sell my puts, and then it started to curl back up, and then it started to push up, and then I sold my puts for a small gain, and then before I knew it, this thing just ripped all the way back down. Which is why it's good sometimes to leave runners that can go. But ultimately, when I'm trading within this, I'm not looking at any of these, I'm not really trading based on the EMAs here, the 9, the 21, the 50 over here, or any of that stuff. I'm still relying on my 1 minute chart for that, but I'm really paying attention to my trend lines. So as you can see, I don't know if I can see if it'll show me over there where that is, but let's see. So this was at 950. My computer's so slow you can see the lag when I do anything. So that 950 candle's probably like right here. Yep. And you can see this pushed up to the 50 EMA. So a lot of these kind of push ups and push downs, they're testing key levels, key EMAs as they're doing that. And in this case, it's the 21 EMA and VWAP over here, and then the 50 EMA. probably the 50 EMA again. So that's how I was basically trading that. And one other kind of place that I got messed up, which I shouldn't have, was when we came down here, price pushed down again, right? And then it came back up, and as you can see, it started to kind of consolidate to the side, right? Kind of in this triangle wedge. And we know what often happens with these wedges, right? At some point, it's kind of consolidating and it's going to break back above. Some more puts at some point. So when this thing actually broke the wedge to the downside, I think I bought more here. And I just held them a little bit too long. Because when this thing finally, if I can get my chart to move. So I was waiting for this to kind of come back down, right? Which means that, basically everything is slowing down. And it came over here. And I'm like, man, I should just sell this, get out of my position, take my $1,500 gain. And I didn't. And before I knew it, this is a 10-second chart, right? So this is 11:14:50 a.m. right here, which is 12:14 your time. Within, what is that, 2 minutes, it was already up. And then the second this kind of breaks out like this, the downtrend's over. We're going for an uptrend. And I'm sitting here like clicking like sell puts, and it's just not filling. It's just not filling no matter what I did. I don't know when I got out, but like I said, I only locked in about half my gains that I had accumulated through this kind of whole thing because of how fast it started to push up. And again, just like with the downtrend, with the uptrend, when things start to push up, I set my trend lines here, touch, right? And as you can see, every time we break a trend line, basically price reverses. So if this trend line continued, when that broke, it's downtrend. Then I start setting new trend lines. So moral of the story for today is don't trade in the no trading zone. And if you do, make sure you're being very smart about buying puts at the top of the orb, calls at the bottom of the orb, and pay attention to when it actually breaks the orb and retests, either for the upside or the downside, so that you're not locked in on calls when it starts to break to the downside. You can get out of them fast, or as fast as possible, and switch to your puts. Hope that helps. If you guys have any questions, let me know.